It is now my pleasure to introduce the speakers for today's webinar. Raja Bose is a leader in Genpact's Banking and Capital Markets Transformation Services practice and is responsible for driving Genpact's global efforts to become a trusted digital transformation services provider and thought leader within the consumer banking industry. He has 25 years of experience in developing and executing revenue-generating and cost containment strategies for top-tier financial services. Michelle Palomera is a leader in Genpact's customer and digital experience practice for banking and capital markets. She has over 20 years of experience in technology and consulting in the financial services industry with a focus on customer and digital experience. Michelle has worked with numerous global firms on strategic efforts over the years across all major segments of financial services. At this point, I'll turn the presentation over to Raja.
Well, thanks very much. I appreciate the introduction, and thanks to everyone who's joined the webinar today on a busy Wednesday afternoon. Today, Michelle and I were going to spend some time talking a little bit about the art and science of consumer banking experiences. Before we get started, maybe give you a little bit of just overview on Genpact itself for those of you that may or may not be familiar. So Genpact started out as a global services organization as part of GE, and then eventually we spun off as a standalone company. We've been, for the last 20 to 25 years, have been providing business process outsourcing services to numerous industries globally, financial services being one of our largest verticals that we focus on. Over the last, call it 6 to 7 years, we've really evolved to become more of a global professional services firm, and we're really focused on working with our clients to make their transformations real. And the way we do that is we leverage the experience that we've gained by being operators and operating processes for institutions, and then really layering into that our experience around digital, around customer experience, analytics, and the like, from all the experience that we've gained by essentially operating hundreds of processes for global Fortune 500 companies around the world. And so today's conversation will be heavily informed by our day-to-day experience in running operations, but just as much informed by our experience in helping customers transform how they engage with customers. And so looking forward to sharing some of our thoughts here, and then also sharing a little bit about and hearing some of the questions that we get later in the hour. So with that, I guess I'll kick it off by just giving you a short little paragraph to read here, and I'll give you just a second to digest it. Now, it's obviously no surprise that we and others look to organizations like Amazon as the organization that provides the exemplary customer experience. But I think what's a bit more intriguing and to some extent a bit disconcerting is how we as a banking industry now are really looking at the likes of Amazon and others as potentially formidable competitors. As many of you likely know, Google announced a partnership to offer checking accounts. Apple launched the Apple Card not too long ago, and we hear about Amazon entering the financial services space almost on a daily basis. So I think the key thing to think about here, and we'll talk about this a little further as well, is what is it that gives Amazon and others like them the right to compete in this space? I would argue, and I'm sure Michelle would also argue, that much of it has to do with the fact that they are very good at offering a customer experience that we all as consumers really like, and I think that gives them an entry point into potentially being able to offer us financial services. So one of the things we did recently, and I think there's a link here on the side that you can refer to, is that recently we actually launched or created a white paper that we call Banking in the Age of Instinct. That was based off a significant amount of research that we did with consumers globally. And we won't get into the meat of it, but really it looked at what are some of the big macro trends that are facing society as a whole, and what is the role of banking or financial services in that context. And one of the things that we sort of landed on is financial services is really moving from financial services to financial betterment. And within the banking industry, we see that the next 5 to 10 years is not going to be evolutionary, but rather revolutionary. We think that we're seeing a critical mass in terms of technology capabilities, the ability to leverage artificial intelligence and process automation to really allow banks, and in many cases non-banks, to really start making some significant changes in how financial services are provided to customers. I think part of that is allowing organizations to harness the best of technology resources as well as human resources. And I think one of the things that we talk quite a bit about is the ability for humans to work with AI engines and AI bots in a collaborative fashion. What does that look like? And then the last thing that we're seeing is, in general, if you look at sort of where some of the sentiment for society is really using the bank for the betterment of society overall and better for the environment that we operate in. So we think these are some broader sort of trends that we're seeing in the banking space, many of which will have impact in how banks or financial institutions engage with clients. And so we can talk about that as well in a few minutes. If you think of some of the broad macro trends that we were referring to, again, and these are sort of very high level, so they're not really actionable on their own. But if you start seeing, we're starting to see some 3 big trends in the world by 2030. One is what we call optimized reality, and it's the ability for businesses to sort of curate experience and products and services in a much more fluid and responsive way. The next one is what we call ethical impact, which is we're starting to see this already in some cases, but society is going to demand that their enterprise take a more active and ethics-driven approach. I mean, many of you are aware that there's a number of financial institutions that have decided that they're no longer going to lend to gun manufacturers, or they're no longer going to lend to oil and gas mining companies. They're taking an ethical stand. Now, whether that's the right business for them remains to be seen, but we are seeing that, and we suspect that we're going to start seeing more of that in the future. And then the last one is what we call whole system planning, which is we're going to start moving to a scenario where we're going to refocus the priorities away from just economic growth and think about what the cost to the humanity and the ecology is as well. So again, these are not necessarily actionable from today, but these are just giving you a broader context of where this is going. I think if we move to the next page, you'll start sort of seeing, from a consumer bank perspective, what are some of the trends that we're seeing now? And of course, I suspect that if you're on this webinar right now, that you are already, in some shape or fashion, already engaged in the consumer banking industry. I don't believe any of these will surprise you, but I think what's important is what the implication of these trends are, right? So I think the first one is, be digital first, and that's not a new statement. I think we've been talking about being digital all along. What we would suggest, though, is over the past few months, we started to see certain introductions in the marketplace where the digital experience is so superior to what was out there before. It's really causing institutions to really rethink how they're approaching it. So an example, of course, is the Apple Card. right? The Apple Card was launched. It is almost an exclusively digital experience that really has changed how banks are looking to deliver not only credit card but other products and services in a digital fashion. I think the other key here is that simply having a digital front end is not enough. You have to be digital all the way to the middle and back office to make these solutions and the experiences work, right? The next one is there's an AI for that. I don't want to belabor the point that you all have heard that AI is here and it's here to stay, and we are finding increasingly greater applications for that in the consumer banking space. Many of you are familiar with Erica at Bank of America, which is their chatbot. Obviously, it's a chatbot, but I think over time it's going to evolve into do much more than just that. That's just one example. There's other examples of how one bank that we spoke to just recently is looking to use an AI engine to really uncover the root cause behind their complaints, not simply tag a complaint when it comes in, but rather use AI to interrogate the phone call or the email that came in to really understand what the root cause is. So I think that's pretty interesting as well. Fraudsters and hackers are getting smarter. Well, they have to, because increasingly most of transactions are done in a digital fashion, and so that just opens the door for greater capability, greater opportunity for fraud there. Fixing complexity. This is a bit of a overarching one, but increasingly what we are hearing from our clients is, I have a kind of a spaghetti of operations in my middle and back office. I need to simplify that. And by simplifying it, I am actually improving and simplifying my customer experience as well. So we find that there's a greater desire to, one, simplify, automate processes. And in many cases, really the question is about, is this a function or capability that I should be performing, or is this something that I should just work with a third party to do? And I think that's allowing financial institutions to start thinking about how do they simplify their activities so that they're really only focusing on those things that are driving the most value. Winter is coming. I think that everyone has heard that there's an expectation of a recession coming. Not sure what the exact time frame of that is, but we are hearing many institutions are putting into place actions to start preparing, be that tightening up their credit risk policies, or improving their collections capabilities. There's activity started today around preparing themselves for an economic downturn. And then the last one is tech fins rising. Now, I know that we've been talking about fintechs for quite some time. I think we would really say that fintechs, who are more niche players who focus on a particular part of the value chain within financial services, and again, solving very complex problems, but doing it in a very targeted fashion, are ultimately really just potential partners or acquisition targets for financial institutions, because they have improved upon something that the banks could not have. However, where we see perhaps a greater threat is in these tech fins or big tech companies like Apple, Google, Facebook, Amazon, who, one, are a platform, right? They're a platform company, and they have not only do they have a technology platform, but they have the customers that consume financial services, and they have the ability to analyze data, at this point still far better than financial institutions can. And even maybe more disturbing now, the latest research that I've seen suggests that nearly 50% of consumers would trust them with their money, right? For the longest time, banks had the trust advantage from these larger tech firms, but now that's eroding as well. So we view that as a fairly significant threat to banks as well. So with that, I'm going to flip over to the next page here and talk about, so what does that mean from a customer experience perspective, right? And, obviously there's a lot of trends and challenges and many of them have a direct impact on how they actually create a differentiated customer experience. We sort of think of it, there's obviously lots of strategies. We've decided to highlight sort of 3 broader strategies that we think that we're seeing our customers and our partners employ as well. The first one is called intelligent customer engagement. Here, it's really about leveraging advanced analytics, data-driven journeys, artificial intelligence, automated processes to really create a more seamless and personalized experience for customers. So just to give a couple of examples here, right? So the ability to using analytics to identify the right product and service for a customer and proactively reaching out to them so that and walking them through the process of how to apply across multiple channels, right? Or if someone calls into the call center, using technology to allow an artificial intelligent bot to address 80% of the questions that come in and then proactively forward those that cannot to a live person. So there's a lot of small and large examples of how technology is being used to more intelligently engage customers. I mean, we are not yet at the point, from an industry perspective, where we can use artificial intelligence to orchestrate what channels are that a given customer should go through. But I think that's one of the aspirational goals as well. So that's one of the strategies, and we'll talk a little bit more about that again in a little bit. But I'm going to now hand over to Michelle Palomero to talk about some of the other strategies for customer experience, and then she'll take you through some additional thoughts on some other slides as well. So Michelle?
Thanks, Raj. What I would say on intelligent customer engagement, I think it was the FIS's consumer banking report, FIS, 72% of all consumer banking interactions are done online now. And it's really important to be smart about how you're applying some of these digital capabilities. And, we're seeing companies sort of all focus in a couple areas, and that's not necessarily moving the needle. So we'll talk a little bit about where we're seeing a lot of the value. The other thing I would say is that, customer experience has been rated as flat by customers in terms of customer experience from 2017 to 2018. I think it'll be interesting to see Forrester's customer index for banking, which should be coming out soon, I believe, to see those rankings. So customer experience in general is not improved at an industry level, which is definitely an issue. So really needing to be smart about these things. The second strategy we wanted to talk about was design system thinking. And this is a concept around design systems. This is a best practice in user and digital experience. Many of you may be working on these, but we're definitely seeing a wide spectrum of maturity here across the banking marketplace. A design system maintains the visual and functional elements of your experience in one repository, literally, and it enables you to manage your customer and user experience and fulfill your brand promise. It helps to bring the consistency and standardization across the customer and user touch points. And we're seeing this as one of the key levers to really being able to bring customer experience to scale. And we'll talk a little bit more about that. The third point here is around refocusing on employee experience. Many firms have been focused more on the customer experience and sort of those front office touch points. However, where the rubber really meets the road is in the back office when things like orders need to be fulfilled or when customers call with issues or questions, and especially at key touch points like account opening being one huge pain point in the industry. Customer experience and employee experience are inextricably tied, and what we're finding is that the that the winners are really investing in getting this linkage right. So to drill into these concepts further, Raj, any other comment you want to make on intelligent customer engagement here? I have a few points, but I don't know if you wanted to say anything else on
Yeah, no, I mean, I think, again, I think we've talked a little bit about this already, but I think, where I would say my perspective where the industry is today is fairly early stages, right? So we are at the point where, obviously chatbots are kind of old news, but I do think that there's value in thinking about a chatbot as an early stage artificial intelligence implementation, and then start thinking about where you can go from there. So today, obviously, you could use a chatbot and ask it some fairly basic questions, and it can essentially point you into the direction of additional information, right? But we're not too far off from a chatbot then interpreting your question, understanding what is it that you actually need, and in some cases, actually acting on it, right? So for example, if for example, you are calling in for a dispute and you speak to an AI chatbot, and that chatbot determines that your dispute is, at a certain, below a certain threshold, it may immediately go ahead and wait and issue that credit without any additional further intervention, because it's probably determined that the cost of pursuing that dispute is greater than the cost of the amount of the dispute itself. So we might start seeing more and more things like that. As I mentioned earlier, we're talking to one bank who is looking at their complaints information and actually using the AI to start understanding what was the root cause behind that complaint, and then actioning accordingly. So I think that we're going to start seeing more and more instances where advanced analytics or AI or other things are going to start sort of being inserted into the process until at one point where you may end up having processes that aren't even handled by a human at all, but that are delivering a better experience. So I think that's at a high level where I think we're going. I think we're in the relatively early stages, but Michelle, I'll let you jump in as well.
Yeah, and on that note, Raj, I'd say in leading with a little more of the science here, back to our title of Balancing the Art and Science, we definitely see many firms really move the needle on customer experience by focusing on applying analytics and AI to some of these back office servicing functions. In the last few years, most of the banks have invested in developing chatbots, as you described, and recommendation engines and things like that, applying AI to those scenarios. But now we're seeing the bigger impact really on the end-to-end consumer journey when those big rock pain points are solved for, which typically involves getting under the hood in that back office. One example of balancing both the art and science to improve customer experience is one where we worked with a retail financial services giant to find churn in their call center. We utilized data mining tools and techniques and applied models to find clear patterns in the data. And then we correlated our understanding of the customer persona and journey to what the data was telling us. And we actually discovered that a key customer segment was calling into the call center twice when they were trying to open a second account, not their first account, but actually the second account. And now this actually negated the original hypothesis that the client had around where the high cost churn was. And there ended up being a very easy fix within their web channel to address this in the user experience design. And we were also able to apply tools to help them monitor this in a more automated fashion. And we wouldn't have been able to discover this without looking through both of those lenses together, the data and the journey. And this is, an example of that art and science coming together here. In the world of digital banking, human touch points are so scarce, and in the branches, the branchless models, the contact center may be the only human touch point that there is. So it's really critical to make these as effective as possible. Getting into the next strategy here, back on design system thinking, you know, there's really a mindset required for this. It's not, you know, just about creating a design system. And so, you know, again, what exactly are design systems? I'll just define this a little bit and to kind of baseline everyone. At the most basic level, design systems enable teams to build seamless and accessible customer and digital and employee experiences faster. Examples you may have heard of or know about include Google's Material Design, IBM's Carbon, Salesforce Lightning, Fluent by Microsoft. The list kind of goes on there. And many of these have been open sourced and are publicly available now. They enable open APIs and improved experiences across the whole ecosystem in the industry. Notable examples in the banking space include Capital One's Gravity and Ant Financial's Ant Design. These design systems include things beyond just design patterns and coded components, component libraries. Now they also include things like how to deal with content, how to deal with motion, accessibility guidelines, and even acoustics, in addition to digital workflows. And back on the ethical impact global macro trend that Raj mentioned earlier, firms like Nike even have sustainability design guidelines incorporated into their circular design playbook. So the point here is if you aren't doing this, you need to start doing it. The second point here, think about the outcomes. It's critical to keep outcomes in mind to ensure that you drive the right kind of value from your investment in these design systems. Is there a large book of redesign work coming as part of a transformation program? Are you modernizing your platforms and implementing new technology? Are you trying to drive more cross-selling and upselling amongst your customer base into your digital platform? A design system can be definitely a key facilitator for all of these goals. Go all in. Many firms claim they have a design system, however, they really fail to properly support the continual cycle of innovation and internal product management around it. Larger banks are all doing this, but mostly in a divisional way from what we can see. Those that have the foresight to think in more of an enterprise way find this to be a key accelerator for driving velocity into their product development and also to underpin their growth objectives in their digital banking business. Few firms we see are actually creating these enterprise-wide design systems, and folks may argue that patterns for B2C really don't apply for B2B, etc. However, as one strives for simplicity or as products become more complex, they really do. When you think about that statistic of 72% of all banking interactions happening online, it is the millennial, you know, sort of driving most of that online activity. So the care and feeding you put into these, the more you get out of it. These are living, breathing things that need to be actively managed like an internal product. These design systems are going to need a portal or some mechanism for accessing and distributing the assets with version control, etc. It has to be kept up to date. And finally, the fourth point here, you also have to measure the outcomes, right? You have to measure the results. Obviously, velocity will improve over time as your design system expands and matures, but it's critical to benchmark the impact it has so you can show the value to your organization and actually justify the investment in supporting, maintaining, and expanding it. Over time, you should see the investment in design and development and actual team sizes shrink if you're being successful and if your design system is being adopted. Think about Ant Financial, which is a fintech with only 9,000 employees, but who has a market cap equivalent to both Goldman Sachs and Morgan Stanley combined. The design system has been a key enabler of their growth and ability to roll out new products with high velocity. One bank we've actually worked with saved over $16 million in capital budget that they would have otherwise spent on product design and development effort to redesign applications in the first year post-launch of their design system. and another company we worked with measured that components within its design system were used over 400 times in the first year post-launch. So make sure to benchmark what it takes today to create new experiences and to design and build out those capabilities. Some of the agile lifecycle management tools can help here, but other mechanisms may be needed as well. And this brings us to our third strategy around refocusing on the employee experience. It's no surprise that companies doing well on employee engagement are also doing well on CX. Employee experience also leads to higher employee satisfaction, creating a positive culture so they can better serve customers, whether it's directly or indirectly, and driving improvements in things like recruitment and retention. But employee experience isn't just about making employees happy. The impact is most critical operationally, where things such as saving them time when finding an answer for a customer issue in a consumer banking call center situation. If you think about that being multiplied across hundreds or even thousands of users and the impact that can have, it's quite large. Organizations with the most compelling workforce experiences generated 22% higher engagement amongst their workers than organizations with a less compelling workforce experience. These workers were also 4 times more likely to stay in their jobs than at organizations with a less compelling workforce experience. Most companies are failing to spend anywhere near the same level of time and dollars to workers' internal digital experience into the systems, processes, and capabilities that support it than is given to the digital experience offered to the external customers. And we see this as a real opportunity in the marketplace, and we are seeing a shift actually occur just this year. We've sort of seen that, that shift start to happen and the refocus on the employee experience. So with that, you know, I think what we wanted to do here was sort of close with the concept around, you know, is experience the ultimate product? And, you know, now in banking, competing on experience is critical. And what's really required to underpin any of these 3 strategies is having a culture of client centricity that is really driven from the top of the house. You know, that will help bring that focus on how are employees really in support of delivering on that. It requires alignment around things like incentives. It requires things like aligning processes, how people are engaging internally on projects, breaking down silos. Approaches like service design can really help companies physically link the customer and employee experience, as well as all the underlying processes, technologies, and people required to deliver the products and services. And this method also helps to reimagine and optimize that linkage, and it will also help to uncover the opportunities for things like intelligent automation, how to apply analytics and AI in a very smart way. Back to the Forrester Customer Experience Index, you know, the winners, the top ranking firms from last year's Customer Experience Index in banking, you know, the interesting thing was none of them were traditional banks. They were either specialty providers like USAA, which caters to a specific audience. Ally was second with Digital Bank. Third was Fidelity's Cash, you know, the banking side of Fidelity. Capital One, which is largely digital, and Charles Schwab's Bank. So it's really key to sort of find your niche of differentiation and sort of cater to that. We're seeing a lot of companies go all in on a chatbot or go all in on the recommendation engine, but it's really important to step back and think about the area of differentiation, the area of niche, and where kind of the low-hanging fruit is as well. So with that, Raj, I think we're ready to open it up for discussion and some questions.
Well, I think before, just one more thing just to add to this before we jump in is, you know, let me give you an example, right? So I recently been working with a number of Australian banks, and for those of you that may be familiar with the Australian banking industry, there's basically 4 big banks there, and so it's a highly competitive market, and they have stopped. Well, this bank has essentially stopped talking about mortgages and credit card. What they now talk about is buying and owning a home. Like that is the solution or the product that they're selling. And that starts way in the beginning, well before the time when you are interested in a mortgage, but rather when you're starting to look for a house. And they want to be engaged with their customers from that part all the way through, once you own a house and are getting insurance for that home, you're paying to get movers into the house, etc. So that experience is now the product, right? The product is no longer a mortgage, but the product is that entire experience. I think and the implications of that, of course, are pretty significant because now they don't have product teams anymore. They have sort of journey teams or experience teams. And those teams are a multidisciplinary team of product people, marketing people, finance people, channel people, all who are working together. So it's really, very much, pivoted their entire organization to look at it from a journey perspective or from an experience perspective, as opposed to the product. So I think I would suggest that that's where this industry is headed. Obviously, we'll go about it in different paces, but I think that's where ultimately we're going. So with that, we thought we'd open it up to any questions from the audience. I see that we have received a few already, but for those of you that are on, feel free to go ahead and put in a question in the chat. I'll start with the first one, which is the question around, it says fintechs and tech fins are merging and challenging banks by providing top-notch customer experience. How can banks win? I think that's a great question, and I don't think it's a very simple answer in the sense that I alluded to this earlier, which is, I think fintechs are really banks' friends. I think they are really there to in some ways accelerate some digital transformation that the bank may have had to do themselves, but they've essentially, a third party has gone ahead and done that. And I think that there's plenty of examples where banks are partnering with or even acquiring some of these fintech firms to help accelerate their digital transformation. So I think that from that perspective, I think that's already happening. I think with regards to the large institutions like the Googles and the Apples and the Facebooks of the world, I do think that there's opportunity to some extent partner. So clearly the Apple Card is partnering with Goldman Sachs and Google is looking to partner with Citi on their checking account. So there's opportunities for partnership as well. However, that is not how the tech firms are going to win. They're going to win because they have better access to data. They have an equal, if not larger, customer base to work off of. And quite honestly, for Amazon to offer a checking account to its Prime customers, of which it has 100 million Prime members, who are arguably in some shape or fashion already profitable, offering a checking account to a Prime member is not that big of a deal from a profitability perspective, because they are essentially subsidizing that checking account with all the other products and services that they're buying from Amazon. So I think they're in a very well position. So I think that banks, my opinion is that in order for banks to compete, they too need to start thinking of themselves as a platform for experiences and products and experiences that many of which they themselves manufacture, many of which someone else manufactures. And they need to start thinking of themselves as a platform as opposed to a monolithic institution that only sells what they make. Because I think in that scenario, they'll be hard-pressed to to beat some of these large institutions who have hundreds of million clients themselves. And I think obviously it sort of goes without saying that the experience that they deliver has to be on par with that. Which, by the way, I think banks are up to the task. If you look at the most latest mobile apps coming from Bank of America, from Chase, and from Ally, I think from an experience perspective, they are on par. So I don't think they can be necessarily means that they're beat there, but I think it's more about the platform itself. Michelle, I don't know if you had anything to add to that.
I would agree. I think, probably Marcus by Goldman Sachs is another great example of taking that view, and they've done a great job of incorporating fintech into their strategy as well as, as part of that platform-centric strategy and model. So I would completely agree there.
Well, actually, Michelle, there's another question that came out that might just be a good segue to what you just said, which is, who would you point to as organizations who are successfully managing the art and science of banking experience, or even beyond?
Sure, yeah. In addition to Marcus, I'd say, one company actually I was co-presenting with last month in London at the Forrester CX event was NatWest. And, they were very open in sharing their model for innovation that we've participated in. And what they've been able to do is come up with a very agile approach to customer experience innovation through idea generation and fostering, and then putting it through a very rapid prototyping model that they kind of disrupted their own model to be able to test these concepts and rapidly put them into market. And I think we have that presentation available if anybody's interested. So I'd say they're one of the firms we're seeing sort of push the envelope. Another one, I'd say JP Morgan's doing a great job. They've really taken an enterprise view across the experience and driving some of the principles and taking that whole lens around a lot of their transformation programs. So I'd call out those three for sure.
Okay. All right. I just got another question as well. So let me. So what are your recommendations to deliver customer experience programs at scale, considering customer experience permeates all the avenues a customer interacts with the bank, such as ATMs, branches, digital avenues, et cetera? I think that's a great question, and I think that. So years ago, I used to work at a large bank, and I was part of the channel strategy team, and this is back in the late 2000s. And at the time, the strategy was, let's deliver everything that we deliver in a branch has to be delivered in every single channel. And because at the end of the day, what we were trying to do at the time was to move people into digital channels, and obviously, many were still going to the branch. And at the time that was the approach. What we found very quickly, though, was that was cost prohibitive, because ultimately, trying to replicate every single function in every single channel was, one, expensive, and then two, many of those functions went unused, because what we realized, which kind of feels like common sense at this point with the benefit of hindsight, is that certain channels are better for certain things. And so what I would suggest is the way to deliver an experience at scale is to understand what each channel is best at and how your customers are using those channels, and then start building the functionality that makes sense for those channels. And to the extent that there's certain capabilities or functions that are no longer available in a given channel, make sure you have the pointers and the education to get customers to use the other channels. So let me give you an example, right? Wire transfers are a very onerous and error-prone activity. Some analysis has suggested that if you go to do a wire transfer at a bank branch, there's a 50% chance that it's going to have to turn into an error. And by the way, that's an error that occurs after the fact, so you don't find out about that error in that wire transfer until you're home. And so what many banks have done is they've moved it to the digital channel, which allows you to do validation of the account and things like that. So then the question was, well, if we have this better way of doing it in the online or mobile channel, how are we going to offer that service in the branch? And so what this bank did was, rather than still allowing them to do it in the branch, what they did is they introduced a set of tablets and laptop screens or monitors that if someone came in to do a wire transfer in a branch, the playbook now was let you bring them over to the digital channel and show them how to do it so that they can, one, do it there, but then now they know how to do it, they don't have to come to the branch to do it again. Not only did that move customers to the digital channel, but it dramatically reduced the error rates of these wire transfers. So I think that's an example where they realized that the branch is not the ideal place for this transaction. Let's move it to the digital channel and only offer it there, but then also provide the bridge to get customers over to there. So I think you're going to start seeing more and more of that. And then, as I said earlier, over time, you're going to start seeing more intelligence built in so that you can actually navigate customers across multiple channels as appropriate. Michelle, if you have anything to add to that.
Yeah, I think the other point about, how to deliver CX programs at scale, we talked about design systems and the role that can play in helping to create and improve, as you're designing and building the experiences out. But then there's the measurement side, and how do you ensure that all your teams are doing this, managing customer experience in a consistent way? And we're seeing some banks really lead the charge with measurement and not just measuring results, but actually being able to track and manage the program. And it's beyond project management. It's, managing things like pain points and having common definitions around what is a pain point. And, we're seeing some customers build actual systems. And there's tools out there that you do certain points of CX around journey analytics, or, and some are trying to get into journey orchestration, but, really creating a mechanism that helps you consistently across your enterprise define and manage, keep that culture sort of whole. So that's another aspect there.
So Michelle, actually that might be a pretty decent lead into the next question we have, which is, how can customer experience programs balance the short-term ROI priorities with longer-term objectives of delivering an effective customer and employee experience?
Well, and I think that plays into a lot of what we've said, but I'd say, first and foremost, having a very aligned process for prioritization is critical. So the way in which you come together as leaders to kind of make decisions around priorities and, looking for the short-term, low-hanging fruit versus building out the long-term chassis, if you will, of what's really going to drive the result. I think it starts with having alignment and having that prioritization process in place. I think, being able to balance, sort of these bimodal ways of working with, the type of model that I mentioned that NatWest has with the continual innovation cycle that is very rapid. I think they do, each prototype's under 100K and it takes less than 8 weeks. So they make sure that the concept can fit into that. So really making, what does short term really mean? And then, being able to measure it to make sure that ROI will actually be there, because you don't want to, fix something downstream in the experience that really could be solved upstream and prevented. So let's take the collections example. does it make sense to optimize your collections operation if you can prevent a collection situation from happening? And, what's the trade-off there? And maybe there's some low-hanging fruit up in the web channel, that you can fix that would save downstream operations work from your human capital side of the equation. So I think those are some ways to balance those priorities, the short and long term.
That makes a lot of sense.
Anything you would add?
I think those are all the.
Raj?
No, I think you nailed it. I think that's a question that comes up a lot, which is balancing the short term and the long term. And I think that the one thing that we do talk to a lot of clients about is how do you use the short term benefits as a way of funding your longer term strategies. And I think that's a key thing because we all recognize that the investment dollars are scarce. And so to the extent that you can identify short-term wins that fund your future long-term aspirations, I think that's a compelling argument to make. And I think that's something that we tend to look for when we do that.